Hey everybody, it's Seth and Paul with Everything Money Channel. On this episode, we do it again. I don't know why we keep going back to the fountain. It's just so interesting. Paul gets in a screaming rampage like a baby here in about 2 minutes into the video where we analyze Tesla stock and why it's an amazing buy for all you investors out there. I want to buy it. Paul is wrong, and you're going to see why right now on the Everything Money Channel. Yes. Paul, I've been with you. I've been riding this train for a couple years now, and I've been thinking about everything you're telling me, and I hope our viewers are too. I got this text from a friend. Paul's obviously very disciplined. That's what he preaches. But I have to wonder if there's a point or a portion of him that he's super pissed and missing out on this mega trend growth of Tesla. Now, Paul, I just showed you a number on my calculator.
What did you say back? Who was that, by the way?
I'd rather not say.
Come on, just say it.
It's our buddy Ryan.
Last name.
This is what I said back.
Just tell me who the fucking person is.
It's Ryan.
Oh, Ryan, gotcha.
He's a Tesla fanboy.
Of course.
I said, I think this is the key.
I like Ryan, by the way.
I think this is the key. I wrote this, folks. You could have just as likely shared a graph. He showed a graph of Tesla just skyrocketing.
Yep.
I said, you just as likely could have shared a graph where Tesla plummeted down to $120 a share and then said, thank God you sold all of your Tesla. Both could have been viable options. Only now, after a huge gain, people say they missed out. But a full plummet could have been equally as viable because, as we know, it had troubles in its past, and I don't know if it's still past it yet.
Did you see on LinkedIn, one of our high school classmates said to me, Paul, at what point does valuation just not matter? Because I don't think it matters anymore.
That's what this episode is about, folks. Paul, I showed you a number on my calculator. I owned Amazon and I owned Tesla. I'm talking 80 shares of Amazon, I think 140 shares of Tesla.
By the way, that was assuming you kept all those, right?
That was assuming I kept.
Then what was the gain on that?
That is the gain.
Oh, wow. Oh, awkward.
It's something like 320.
No, how's that?
340,000. Paul, that's from when I sold versus.
Oh, yeah, you're right. Okay, gotcha. Go ahead.
So it's $340,000 of dollars I would have had in my bank account today had I not sold.
So would you sold it today?
I don't know.
You wouldn't have.
You always say that, but so regardless.
When everybody tells me like, oh, I just sold, but everybody thinks they're the ones to get out of the room at the exact right time.
Well, I do think that.
Of course.
But the key is, it beckons the question that Tesla is incredibly overpriced. And if that doesn't matter, how long can it not matter before, damn it, it just doesn't matter? For example, everyone says Disney is overpriced. You have to take a second mortgage out to go to Disney with you and your kids. I think it's usually between somewhere around $5,000 to $7,000 to stay near the park and go there. Incredibly overpriced in some people's mind, and it's the greatest damn thing in the world, and it's never going down in price. It's never going down.
Yeah, you're talking about an experience.
So how many years does it not have to matter about Tesla being overpriced before it doesn't matter? How many years can we go?
How many years can I go, or how many years can you go?
Our viewers.
I can go forever. Well, a Walsh student asked me when I taught at Walsh, they said to me, Paul, at what point do you just say, okay, I'm just going to get in the market? I go, I will wait forever till I die. And then you should have seen the shock on their faces. When he goes, what? I go, yeah, I would wait till forever.
But guys, our viewers can't do that, Paul. They have to do something with their money.
Our viewers shouldn't be buying individual stocks.
Really?
No, of course not. You should be buying ETFs.
Let's go over the 8 fundamental pillars of Paul Gabriel when analyzing a stock with Tesla.
So our friend from high school commented, and he kept telling me I was the man because I think he thought it was going to piss me off. And I wrote a really long response to him. And I love this guy, by the way. Doug. You remember Doug?
I do know Doug. Yeah, I saw you guys.
Doug's awesome. Yeah. Doug is literally, first off, he's a great tennis player. Whenever he plays me, he takes it easy on me.
Get to the point. I don't give a shit. Go.
What?
Get to the point.
Oh, man.
Listen to him.
Even Don's a little taken aback here.
He's talking about his tennis game. Let's go.
Well, Doug's very nice, and he takes it easy on me, but he acts like he's really trying.
We've analyzed Doug now. Let's analyze Tesla.
Are we gonna do? I'm gonna message Doug and say we're talking about this here.
Doug, I do love you, but come on. Doug's getting bored watching you talk about Doug. What did he say?
He just said, Paul, I think momentum matters more than valuation. Valuation is not mattering.
I read this on LinkedIn.
And guess what? These are the things you hear during market tops. And it's like, valuation doesn't matter anymore. Warren Buffett doesn't do it right anymore. These things don't matter. Okay, great. When you look at Tesla, the way Ryan's looking at Tesla, the way Doug's looking at Tesla, isn't what is Tesla. They're sitting there saying, I see a price and I see it going like this.
Yes.
not what's behind it. They can sit there and talk about all day long. If we brought Ryan on the show right now and said, Ryan, tell me about Tesla.
It wouldn't matter.
It was 2 weeks away from bankruptcy twice in the last 2 years.
But Paul, when does it not matter? If it doesn't matter... If it doesn't matter from 3 to 500, and then 5 to 1,000, oh my God, I can't believe it's 1,200. I can't believe it's 1,500. Now it was
same thing happened in 2000. And what happened in 2000?
Everything exploded.
The same thing happened with real estate in 2007. What happened? Literally, like Doug's comment was, well, Paul, okay, so it collapses and goes to 1,000 or 1,500. I'm like, or to zero, because guess what? They were 2 weeks away from bankruptcy twice in the last 2 or 3 years. This is a company that's growth has actually stagnated. I don't think they have massive growth anymore, do they? The stock price does. Let's go take a look.
Go ahead, Paul. Show me what you got.
So,
if you like what Paul's delivering to you right now, the access to the wide charts, the expert analysis, smash that like button, pretty please, with sugar on top, because Paul's working hard to show you guys what dealio is. Now, we were hesitant to analyze Tesla because there aren't many actual returns or earnings.
So Tesla's a fast-growing stock, right?
What, the fast? I mean,
is it a fast-growing company?
No.
Let's go back 5 quarters.
Pillar number 1.
$6.35 billion in revenue.
Revenue growth over the past 5 years. Go, Paul.
5 months. I'm going 5 quarters. Sorry, 5 quarters.
Oh, I'm talking about years.
Let's just talk about quarters for a second
fine.
right now. 6.35. What's the next one, Seth?
7.3?
6.35, 6.3, 7.4, 6, and 6. What's going on with these numbers? Is fast-growing company?
It's not growing at all.
Oh, wait. Tesla's such a fast-growing company. They're changing the world. Look at how fast they're going. Oh, they're not growing fast anymore. What are we going to do? Guys, it's not fucking growing anymore. Stop talking what you need. You're just trying to convince yourself of something that does not exist. For a company to triple in value in 6 months, why is there no growth?
I love this, Don.
Why is there no growth? For fuck's sake! 6.35 in June of 2019, and we have 6 less than 2000. It is literally less money. It is 5% less in revenue. I don't get this.
Paul, if it doesn't matter, then why even look at the Y charts?
Okay.
Why even look at the Y charts?
Because at some point, you're buying a company.
I think at some point you want this to make sense, and when 97% of the world doesn't want to...
I don't.
Go ahead.
Mo texted me this morning and says, I just don't get Apple. You know what I said to him? I called him and I go, Mo, stop caring.
Go on.
Your job isn't to care about an individual stock. Your job is to care about which stocks fall within are selling for less than the value you've determined.
That's going to make for a great promo video, Don, of him just screaming, why the fuck are you guys... Okay, keep going.
I mean, I look... Everybody sits there and says it like they caught Tesla. What about the other 20 Teslas that you didn't catch that would have gone to zero?
What are those
That's exactly it. You don't even know them because they didn't get to that point.
Okay, you're right.
How many IPOs end up failing? The vast majority of IPOs go to zero even. But people are always like, I need to get an IPO because it's going to become the next Microsoft
vast
and
majority?
Google. It doesn't happen.
Vast majority?
The vast majority. They end up being worth, I shouldn't say go to zero. They end up being worth less than their IPO price.
Okay.
Years later.
Pillar number 2. What about profit growth over the last 5 years?
They do have that, though, I think.
Profit growth over the last 5 years.
Let's go to the last 4 quarters. Let's go to the last 5 quarters. Let's compare apples to apples. I'm just talking about quarters here. And this is why I'm talking about quarters here. Because everybody's talking about how fast growing they are.
Yeah.
If they're growing that fast, you should see it quarter to quarter basis.
Yeah. And in fact, over the past year, this has been the most massive growth of Tesla. I mean,
yeah.
It was $300 a year ago.
And congratulations, by the way. Tesla lost $400 million 5 quarters ago, and this quarter they made $104 million. Congratulations, Tesla.
16 million? What's that? 16 million? Look at that quarter.
What the hell are you talking about? Net income, Seth.
I know. Look 1 quarter before 104.
Oh, before 104? Oh, yeah, 16 million.
16 million bucks.
So they lost 408, made 140, made 105, made 16, made 104.
This is profit growth.
This is profit in a quarter. So in what are they worth right now? What's their market cap?
Well, didn't it just switch when they...
In the last 4 quarters, how much money they made? Let's do that.
Look it up.
Right here. I'm looking at it right here.
Oh, no, I'm sorry. The market cap. Because...
Okay, hang on a second. In the last 4 quarters, the last 1 year, they've made 248, 264, 368. $368 million.
$368 million.
They are currently worth $460 billion fucking dollars.
Oh boy.
So $368 million divided by $460 billion. Somebody tell me that percentage.
Divided by 468. I can't even write billion on my damn phone.
Yeah, put 460 and 9 zeros after it.
I'm trying.
Good boy.
0.0008. So,
which equals 0.08%. So, in the last year, if you bought a Tesla today and it's not growing anymore, it stopped growing as we show from the revenue,
yes,
and it makes the same profit, you're going to make a return of 0.08%. If you own the company in full, and you're going to sit there and say, everybody's going to sit there and say, but Paul, it's the stock price. Eventually, the stock price matters on the profit. I don't care what anybody says, stock price in the long run goes to profit. It has been proven time and time again for the last 150 years, and nothing will ever change that. Because a dollar is still a dollar.
But
you're telling me right now, if you believe this out there, you can come buy my company today, and I'll give you a crowd-pleasing $5 billion deal. You can buy it for $5 billion, and you'll make way more money than that. This is insanity. All people are saying when they say I'm missing out is they see this stock price.
Yes.
That's all they're sitting there saying. And guess what, people? I can't argue that. And guess what, though? This is how I sleep at night knowing I miss out on Tesla. That's how I sleep at night. Can I be wrong? Absolutely. Amazon's a prime example. We won't get Amazon right now. I shorted Amazon at $300 a share because it was worth $50.
Yes.
It is now worth $500 to $700 in my opinion.
And currently selling for $3,500.
Well, now it's split adjusted now, et cetera. Oh, no, Amazon didn't split.
Not yet.
So I was wrong because now the value that I've determined is higher than the price I shorted it at.
Paul, you were calling Tesla crazy when the market cap was $200 billion like 3 months ago.
So let's go back to that then. Don't forget, people, it's a car company. Anybody who says it's not a car company is convincing them. It's just like Bitcoin. It's blockchain. What the F does that mean? Tesla is a car company.
Yes.
Tesla is a goddamn car company. This is their gross profit, 21%, people. That means on every car they sell, they make about 21% in profit. Does that make sense?
Yes.
Okay. Let's go look up one of their competitors.
Let's go look at one of his competitors. Go ahead.
Pick a competitor. Biggest one in the world.
Honda.
Well, Toyota's the biggest one in the world.
Do Honda.
Honda? Okay, whatever.
Honda's a sort of Ohio, got the Marysville Honda plant.
Yeah, got a lot of Ohio stuff. So, Honda is worth $45 billion.
1/10 of Tesla.
1/10. What's their profit margin? 16.7.
Less.
Well, less.
4% less.
Well, you call it 25%, 20% less, but yes. Okay, so it's bad. Let's go to their financials. Look at their revenues in the last 4 quarters. Remember, Tesla's was about $6 billion a quarter, right? $6 billion a quarter.
34 billion, 34, 31, 19. $34 billion a quarter. Tesla's is 6?
6.
Okay. What about revenue growth?
Well, that is the revenue growth.
Oh, I'm sorry. What about
the profit?
Profit growth.
Now, they've lost money the last few quarters, but because of the COVID. So I'm impressed with Tesla actually making money. That is impressive. But when they do make money, 1.6, 1.8, $1 billion.
Tesla was making
$100 million.
$100 million, a tenth of that.
A tenth of, no, not even, a tenth of this one.
Yes.
So it's worth 1/10 of the company, but it made 10 times more per quarter.
That's right.
So it's 100 times difference.
Wow. I hear you. Tesla's going to go to 5K, Paul.
I know. Okay. And guess what I'll do? And guess what? I'll be wrong. You'll feel like an idiot for listening to me. I apologize.
So I think the key is what I think to myself is, why can't we go find a company that has massive growth that no one's ever heard of and invest in that one?
That's the thing that people don't understand.
Or has the potential for massive growth.
Good luck. Good luck.
Well, if it's that hard to find,
find me that genie in a bottle. You're gonna rub it and go, hey.
I think people are saying that's Tesla.
Okay, great. And everybody knows about Tesla. Everybody and their mother knows about Tesla. Who owns Tesla? Let's go look up. That's a good idea, actually. Let's go look how much potential it has. We're gonna look up Tesla. Institutional. Let's go to short.
Go ahead, Paul.
This screams bubble. Screams bubble.
Tesla in general?
Tesla in general and the markets in general. Tesla, I'm telling you right now, to be a $460 billion company, car company, that makes 21% in margin, they need to sell more cars than are sold in the U.S. today per year.
To justify the price?
To justify the price, they need to sell. Let's do the math. Can we do the math real quick?
Sure.
Actually, let's do this will be a good example. $460 billion market cap. Okay? Mm-hmm. Okay.
Jeez.
What's a PE ratio for a car company? For a growing car company. Let's call it 20.
Okay, yeah.
So what this means, guys, is after taxes,
price per earnings.
The price to earnings ratio, that means $460 billion divided by 20 is $23 billion a year. So after taxes, they need to make $23 billion a year after taxes. Okay?
What do you mean they need to?
So if you're going to multiply the profit by a PE ratio to equal the market value, because PE is basically market value divided by profit. Okay?
So we want it to be around 20, but we know Tesla's not 20. It's like 300.
Don't worry about that. I'm trying to sit there and say, for it to be worth what it's worth today, what do they need to do? This is an analysis that we always do.
Okay.
As an investor, you sit there and say, okay, can we justify this price? Well, is it even possible? Okay, so can you agree with me that in order to equal 20 PE,
yeah.
Market value of 460 divided by 23 divided by 20 equals 23. Mm-hmm. Okay. If they make 20% on gross margin, what is their overall profit margin though?
I saw it. It's a 1.7%.
Okay. Let's call it
2?
Let's call it 5%.
Okay.
5% profit margin. So to make $23 billion at 5% profit margin,
oh my God.
What do they need to do in revenue?
5 times that?
No, 20 times this.
What?
$460 billion in revenue. So $460 billion in revenue, 5% profit is $23 billion. Okay, so we're at $460 billion in revenue needs to be had. Let's not even realize how ridiculous that is. How much is their average car?
80.
Seth, pull up your trusty calculator.
I got it. Oh my God.
460 billion divided by 80,000. Please tell me how many that is.
460 billion?
460 and then 9 zeros after that.
I got it. Divided
by 80,000. That's an 80 with 3 zeros.
Thank you.
Give me the numbers.
5,750,000.
Really?
5,750,000.
Oh wow! I'm actually surprised it's that little.
So the number is 5,750,000.
We also assumed their profit was going to be 5% versus 1.7.
Yes.
And the profit on other car companies, did we look at that yet? We didn't even look at what other car companies make at the bottom line.
Sure.
I don't think it's 5%, but let's assume this is the case. So, how many new cars are sold in the U.S. every year?
I have no idea. Do you know?
18 million.
18 million a year?
So, they're going to go occupy now 1/3 of the U.S. car market.
Yes.
Today they have to justify today's price.
They've only sold 1 million cars total.
How many did they sell last year?
I don't know per year, but in 10 years,
I think
it's only 1 million.
Yeah, I know, but at 350,000, I think they did last year.
Okay.
They need to grow by 16 times today's volume
currently
to justify today's price, assuming that they get 5% bottom line, which they've never gotten, and I don't think other car companies are getting that anyhow.
Sure.
Maybe they're getting, even if they're getting 8, 9. The whole point I'm trying to make is you're factoring in so much growth here that if all of a sudden their sales doubled this year, what do you think would happen to the stock price? Would people be like, no, hang on a second. We already factored that in there. The stock price is going to stay the same.
I'm going to pull you back, Paul. I'm going to talk like somebody who has no idea what you're talking about because they probably don't as they're watching this. I think I've figured it out now.
Okay.
For every person that says, you know what, Paul, screw all this bullshit. I think Tesla's amazing and the price is going to go up. Good. And your response would be, then just fucking go for it.
Go buy it.
Go buy it.
I don't care.
Yeah.
But I will say one thing. Mm-hmm. When something comes out and they were maybe fraudulent or something happens that causes them to go to a very low price, don't cry. Don't cry.
Well, they're going to cry.
But you can't. I'm not crying. I'm not sitting here going like, oh my God, I missed out on Tesla. 0. You know what I missed out on? Damn it. I really wanted Love at 25 and I didn't buy a full load because I thought to myself, it'll go lower and I'll buy more shares, and it went to 40. That's what I cry about. Because I sat there and said, love is worth 50 to 60.
If you go back a couple months, type Southwest into the search bar, you can see our analysis of Southwest stock.
And even
probably from
Carnival Cruise Line, I'm sitting there going today, do I just go buy a ton more because it's selling for way below what I think it's worth? Mm-hmm. Do I just go buy a ton more? Those are the things I regret. When I do my analysis, Big Lots. I analyzed Big Lots when it was at $11 a share. It got to $10.50. I said it was worth $40 to $50. It's now currently sitting at $55 a share. I regret that one. Because I sat there, did the analysis, and I was like, I'm right on this one, and I didn't pull the trigger. I won't say why. I didn't pull the trigger. Those are what bothered me. This doesn't bother me. They have to sell 6 million cars a year to do that. What are the car companies right now? What do they do? What are the U.S. car companies? By the way, this is actually international, too. So can they still do it? Absolutely. But the whole point I'm trying to make is you're assuming they're already there.
Yes.
You know what it's like doing? I think I'm going to be a billionaire someday. Mm-hmm. So give me billionaire status today.
I see.
Give me my $1 billion net worth today. Why? I'm going to be billionaire someday. We're going to be worth $460 billion someday, so give it to me now. I'm not saying Tesla won't be worth $460 billion someday. What I'm saying is, if you're paying that today on the hope, when they've gone from when they have only 350,000 cars sold, then you get to 5.75, there's going to be a lot of fluctuation in between. Because if it's going to 5,000 a share, that's doubling again, right?
Yeah.
So now it's going to be almost $1 billion company. And now you have to double this number. So now you have to do 11.5 million cars a year.
Or you just don't care about any of this crap and you just love Tesla.
And guess what?
Like people love Disney.
When you do that,
Have you gone to Disney?
Yeah.
Whole families dress up as Matt. It's ridiculous. I mean,
guess what?
The fanboy.
Is Disney stock selling for
no,
1,000 times
But
profit?
I'm saying is no matter what Disney's going to ever cost, people are going to go.
I got it. I don't think that's the case. And by the way, that's definitely not proven. Look at Euro Disney. Euro Disney was a massive failure.
Really?
Oh, yeah, absolutely. They didn't hit any of the projections they wanted to hit. Why? It was too expensive. That's what people in Europe said. They're like, it's too expensive. We can drive there. Let's just go drive. Let's not stay at hotels. You're right, Seth. I've been wrong on this one. Great. I have no problem being wrong on this one. Mm-hmm. Amazon. I was definitely wrong on Amazon. I started shorting at 300, and now, luckily I got out of the short a long time ago, but it's now worth over $300 a share. Yep, I was wrong on that one. Tallied up. The market was irrational longer than I was willing to stay solvent. Mm-hmm. Okay. And guess what? Tesla, I don't know what Tesla's worth, though. That's the thing. Like, I look at it going, I actually worry about issues at Tesla. I'm not saying fraud, but he was 2 weeks away from bankruptcy twice, guys. Mm-hmm. You can't look at me and say that's a company that should be worth $460 billion because it was in the last year or two. How do you justify that? I don't know. All I'm saying is it sucks to see this happen for me because I look at it going, the only reason it sucks is because of you. But I'm telling you right now that Tesla's got to stay up forever for you to be like, Paul, I lost out. Mm-hmm. You're right. The one comment you made is, yeah, it went like this. It could have easily gone like this. And what we just said, thank God we didn't. Well, thank God we sold it here.
Tesla, yeah. Thank God we sold Tesla.
I don't know. Here's what I'll tell you, though. Everybody who invests this way, they never beat the market, ever. Because there's a come-to-Jesus moment. They never beat the market. It's funny. I offered Doug a bet. I said, Doug, let's bet on the next 10 years in stocks. You know what he said to me? I'll take the S&P ETF. Wait, Doug, why do you do this? I didn't want to say that. Doug, I hope you're watching now. And you say, my comment was like, well, wait a second. You're not practicing what you're preaching here. If you practice what you preach, then you'd be putting your money in Tesla. But you're not.
Yeah.
Why is that? He literally sat there and said, I would put my money in the S&P ETF. You know why? Because he knows he can't beat the market. And you know that you can't beat the market. I can beat the market. I'm very confident the next 10 years I'm going to beat the market. Mm-hmm. Am I could be wrong? Absolutely. 5 years ago I was wrong. The last 5 years I've been wrong.
Yeah.
Okay. But I know that my way of buying is the way that's going to work in the long run. Will I miss Teslas? I will never, ever have a Tesla in my life. Ever.
The car?
No, in terms of a stock like Tesla. I will never be the guy who buys a company and it goes up 20 times in a matter of 2 years. Never. That'll never, ever happen in my life. Mm-hmm. Why is that? Because I don't buy those ones. I would have probably sold it by then going, listen, I think it's worth 100. It went to 150, 160. I would have sold it. It went to 1,000. Okay, sounds good. Mm-hmm. I don't care.
Well, that's our take, folks. I will still argue with this with Paul till I'm blue in the face. I hear you, normal people who don't think this way. And I do think Tesla can still go to 5.
Great. And it probably will.
10.
And it probably will.
Right?
Go buy some. If you think it's going to 5, Seth, you should go buy some.
I'm not going to buy any more.
Go buy 10 shares.
My kid might like to.
Great.
He loves it.
Good.
You said great and good really high. Good. Great.
Listen, it's like I said, I love Doug, and I don't want to sound like I'm picking on him, but when I made the bet, when I challenged him to the bet, which he didn't accept yet, by the way, he literally said, I'm going to do S&P ETF. And I just chuckled going, exactly. Exactly. And guess what I would do when the bet starts today? I wouldn't have stocks for a while.
Yeah.
I would wait.
Yeah.
Because I'm practicing what I preach.
That's true.
I will take a lie detector on it. 0 FOMO on Tesla and Amazon. 0 FOMO.
Don't have FOMO yourself. Like and subscribe to get more of this bullshit channel. Paul and I arguing on the.
If I'm still around in 3 years.
I'm closing the video, Paul. Damn it. Everything Money with Seth and Paul. Stick with us. Love you guys.